Alrighty, want to start right here. Very important we start right here with the VIX, okay? So, what I'm showing you is the past 5 years for the VIX, okay? VIX is volatility in the market, and usually in time periods when the stock market's crashing, going through a correction, VIX usually spikes up quite severely, okay? This was back Rona, because keep in mind, Rona was 5 years ago now. If we go back 5 years ago, the stock market was in an absolute insane crash at that particular moment, okay? And then basically toward the end of March of 2020, that's when the stock market actually bottomed, okay? Now, additionally, we watched the VIX spike up quite severely in 2022, certainly not to 2020 levels. That was a whole different ballgame, but in 2022, the VIX spiked as well, right? Now here very recently, as in just this past week, we witnessed the VIX actually go to the highest level we've seen actually in a long, long time, to levels that we really hadn't seen much of since like 2022 time, right? And so the VIX definitely spiked huge. Now it's down big today, but the overall gist of it is the VIX was up severely this week, okay? Now the thing you got to understand is when you have a high VIX, that means people are paying through the roof for put options, essentially. And the sellers of put options are able to make huge premiums when we got a high VIX. I mean, huge premiums. And so now these individuals that have been buying put options this week, they paid sky high prices for them, okay? I'm talking like sky high prices, like people that were buying Rolexes in 2022 type prices, okay? That's what I'm talking about. People that are buying Rolexes in 2021, okay? Like top prices that people had never seen. Like that's what we're talking about here recently, right? And so the sellers have been able to make massive premiums on selling these put options, which then they can do whatever they want with that money, right? Including they can go buy more stocks for it as well, right? Now, keep in mind, the VIX was dead in December and January, which means if you wanted to buy put options, right, in December and January that were 3 months out, 6 months out, a year out, whatever, you could do so for extremely cheap prices because the VIX was so low. But when the VIX is high, you have to pay these sky high prices for put options. Now, the people that were loading up on put options this week, which there's a lot of them, right? I showed you the data talking about the highest put volumes we've ever seen. You got to understand, those people that were loading up on put options the past few days, many of them are already down 20 to 50% on their put options. Some are down way more than that, and I'm going to show you some real life examples here right now so everybody can understand like, whoa, this is how bad it can get so quickly when you way overpay for an asset. Guess what, right? People that were way overpaying for certain stocks back at the end of 2024, the very beginning of this year, those folks have paid the price because they bought at some crazy PE ratios, right? Now, additionally, people are going to learn another very hard lesson here, where you can't just pay any price for put options. You think, oh, the market's tanking right now so I can make easy money on put options? Okay, good luck. Now people are learning a very expensive lesson. They went and loaded up on put options. Now they're looking at their portfolios and they're like, oh my gosh, I'm down 20% on these puts, I'm down 40% on these puts, I'm down 60% on these puts. These puts just expired worthless that are expired today. These ones are down 70%, right? And then you got time decay there. So it's like, is that money coming back? No, the money's not coming back because you have time decay. When an option expires, that's it. That's it. It's over. It's over. It's not like holding a long position and you go down 20% on a stock and it's like, oh, that's okay. I'll come back over the next few months, over the next year or something like that. No. When your puts expire, they're done. It's over. The game's over, right? So let me show you a good example of a stock that a lot of people would have been buying put options on this week, okay? Meta put options. Now, keep in mind, these are the ones that are expiring next week, okay? Look at how much those went down today. Meta stock wasn't even up that much. Like Meta stock had a decent day. I think it was up like 2 or 3%. And look at how much the put option volumes fell. And not just volumes, but the price. Look at this. The 560 strikes were down 74%. The 565s were down 74%. The 570s were down 70% today. Why? Well, the stock was up a little bit and the VIX was down severely. And so the premiums, all of a sudden people say, you know what? Maybe I'm not willing to buy those put options now. Look at even these ones around where Meta's trading at right now. The 605s were down 54% today. 54%. You can't just pay anything for a put option and think you're going to make money. No, okay? When the VIX is spiking like that, it's a very dangerous game to be buying put options. You're playing a game of hot potato. And this, folks, is when panic sets in. When people are suddenly looking and they're like, crap, my puts on stock ABC over here down 30%, 40%, 50%, 60%, 70%. Oh my gosh, right? Look at 2 weeks from now put options. Look at this. These babies are all down between, let's call it 30% and 50% here today. Imagine if the market's up on Monday. This is when panic sets in for folks. And it's a different sort of panic, right? 1 minute they're panicking over, oh, I got to sell a lot of stocks left and right because the market's going down. The next minute they're panicking because they're like, crap, I just loaded up on put options and now I'm down 40, 50, 60, 70% on my put options. And they're expiring very shortly here. So this is why they're like, please crash market because I need this, right? Look at Palantir puts that are expiring next week. Look at these today. 75% down, 69% down, 60% down, 56% down, 47% down. Even these ones like these 93s down 44% today. What if the market's up next week? They're all expiring worthless. Worthless. And people just paid sky high prices for these things. So this would be the equivalent of you bought a Rolex at the most crazy prices in 2021 or 2022, right? And then you go to sell that Rolex and you know what happens? Somebody says, okay, you paid, $35,000 for that Rolex that never traded at that price. I'll give you nothing for it. I'll give you $5,000 for that Rolex, okay? And you're like, what? What's going on here? Look at these Palantir put options that expire a month from now. So we got time here to play out. So you would think these ones shouldn't be down that much. Oh, you're mistaken. Look at this. 48% down, 43% down, 40% down, 38% down, 23% down, 36%. And those ones expire in a month from now. Oh my gosh, right? You got to understand, the shorts need you to sell your stocks. They need Wall Street to sell their stocks because their put options on a day like today just got obliterated. So now if this market starts bouncing back, all their put option contracts are all going to expire worthless. They're going to have to take 80, 90, and 100% losses on these. Brutal. They have to have selling pressure. They're like, please Trump, come out and do some crazy tariffs or something here, okay? Longs, we can sit back and we can chill, right? I don't care. If somebody doesn't go buy Meta stock tomorrow or next week or next, I don't care. People are going to be buying a lot of Meta stock over the next several years. Same thing with Cheesecake Factory stock and all these other stocks I own. I don't care. If people don't want to buy them, that's fine with me. I'm a long. I can sit back and chill. I've made so much on these stocks and will make so much on these stocks in the future. I don't care what happens to them short term. It means nothing to me. It means nothing. And that's the beautiful thing about being a long. And that's why we're able to be calm, cool, collect it, sit back, make bank, while these shorts are freaking out over this and that, in and out of the market, buying puts left and right, in and out, freaking panicking. Oh my gosh, what's going on here? And we're just chilling, making a fortune. It's all good with us, right? Now, let me show you how easily investors are manipulated, because it's fascinating how quickly investors can be manipulated one way or another, okay? So this is our latest investor report. We put this out to the private stock group, and we go through a bunch of data showing you everything that's going on in the financial markets, the business community, all the important stuff you'd want, okay? So one of the things we show in there is what the AI investor sentiment numbers are more recently, right? And look at this. 3 straight weeks now, 55% plus bearish. And from my understanding, that's the first time that has happened since March of 2009, which is when the great financial crisis, stock market crash actually bottomed, which is fascinating to understand, right? And that's crazy because let me show you a little further back. Let me show you the investor report back from January 3rd, how the year started, which, by the way, that was just 2 months ago. Look at this. Look at this. We were at 34% were bearish at that particular time. 35% were bullish. So in a matter of 2 months, the sentiment just went awful that quickly. People were manipulated that quickly to just go from bullish, feeling great about the market, great about stocks, just feeling absolutely horrible. To levels that we hadn't seen since the great financial crisis. Isn't that crazy? And you might say, well, but Trump tariffs, right? Okay. Trump's the tariff man. This shouldn't come as any surprise. All this Trump tariff baloney stuff that's going on, Trump's Mr. Tariff. Were people around in the first term? Did people listen to what Trump was talking about on the campaign trail? Did anybody pay attention? This isn't new. Like, for people to be freaking out over Trump tariffs. Trump? Come on, man. He's Mr. Tariff. And some of these tariffs are going to go through. Some of these tariffs aren't going to go through. They're just for negotiations. He's Mr. Tariff, man. Like, come on. Come on here. We're going to freak out over that? We're going to freak out to levels that we hadn't freaked out about since the great financial crisis? Because Trump is doing some tariffs? The tariffs everybody knew was coming? What? Make it make sense. Come on, man. And then Trump comes out and says this. He says, market's going to soar. He says, quote, financially, we're stronger than ever before. I think the markets are going to soar when they see what's happening, Trump said. Right? And that's Trump. Like, 1 minute it can sound like he wants the stock market to crash, and the next minute it sounds like, we're going to have the most booming economy in the history of mankind, right? And this is why I did a video on Inauguration Day called The Trump Stock Market Will Be a Roller Coaster. Watch that video, and you'll see exactly what I was talking about. It's going to be a roller coaster ride, man. 1 minute people are going to be freaking out, Trump this, Trump that. Next minute people are going to be feeling great about the market, and Trump's going to take us to all-time highs and higher than we've ever been, okay? Now, next subject up here. Is a correction over, right? First off, I hope not. I hope the correction's not over. I don't want the correction to over. I mean, here's the way I'll put it to you like this, right? So let's say I love my Pepsi Zero, okay? They used to call it Pepsi Max, but I guess they call it Pepsi Zero now. So the food store, Smith's down the street, right? Owned by Kroger. Let's say they're having a deal, $3 for a 12-pack. And I'm like, sweet, baby. I love my Pepsi Zero Sugar. But you know what? Then I say, you know what, though? I want to pay more money for it. I want to pay $6 for it, so I'm not going to buy it. Would that make any sense? No, of course not. Would it also make any sense for me to be like, please, Smiths, raise the price to $6 for that 12-pack because I don't really want to pay $3? No, of course not. The same exact mentality when it comes to stocks. I don't want my stocks to be up short term. I'm not a stock market trader. I'm a long-term investor. I'm in these companies for the next several years. When I buy into a company, I'm thinking 3, 5, 7 years out. I'm not thinking 3, 5, 7 days from now. I could care less what happens over the next 3, 5, 7 days. It means nothing to me, or the next 3, 5, 7 weeks, or honestly the next 3, 5, 7 months. All that matters is the next several years to me when I buy a stock. So that mentality is like, I hope the correction is not over, right? But is a correction over? Well, first you got to understand why we're not likely to have a crash. All things are possible. We could always have a crash, whole market crashes, all those sorts of things, right? But why not a crash? Well, you got to understand, in order to get a stock market crash, you can't just have one thing, okay? So what got us to this correction? Valuations were sky high, and Trump, tariffs, and Doge, right? All the Doge worries, tariff worries, drama, people are uncertain, what's going to happen, what are the prices am I going to pay, what's going on with the countries, everybody's fighting, okay. That got us this correction. That's not going to get you the next correction or to get this market to crash. Now you need a new catalyst, a new big event to happen to get the market down to the next level. And then to get it down to the next level, you need another one. And then another one. So if I take you back to like 2022, for instance, right? We were able to get that crash in the market where the NASDAQ went down 37% peak to trough from where it peaked at in Q4 2021 to where it bottomed at in Q4 2022. We were able to get that because we had a multitude of events happen. It wasn't just, inflation's high, so that's why the stock market crashed that year. No. We had very high valuations to begin with. Then we had a Federal Reserve that it became very obvious at the end of 2021 into the beginning of 2022 that, the Fed's going to have to start raising rates. And that was an adjustment period for the market. Crap, we're going to go through a hike cycle. You got to reprice assets. Then Russia went into Ukraine. Everybody's like, oh, crap. What does this mean for Europe now? What does this mean for inflation numbers? This is a mess. What's going to happen? Then, over the spring and into the summer, we had what? Inflation goes sky high to numbers that people couldn't imagine. We had hot CPI after hot CPI after hot CPI. And at the peak, it was 9% plus CPI. People were like, what is going on? That was the next level of panic. And where was the last level of panic? Well, also we could say Jackson Hole was somewhere in there as well, which was when Jerome Powell basically said, we need to go even higher here. But then the next level of panic, which was the very end last panic, was around crap. all these big tech companies are missing earnings left and right. They're not going to hit their numbers, right? And that basically happened because from the second half of 2020 through the second half of 2021, big tech company earnings were booming. We had stimulus, we had people forced to be home, Amazon's numbers, Meta's numbers, all these companies' numbers were booming at that particular time. It was phenomenal. And everything was great, right? And then they had to comp those numbers in the second half of 2022, and it wasn't pretty. Revenues were among the weakest we had ever seen from those big tech companies. It was bad times. And those companies had also got way overhired, so the earnings per share tanked off a cliff. And that was the last hurrah for that crash, okay? If I took you through the great financial crisis, same exact thing. It wasn't just like, oh, we had a big recession, that's why the stock market went down 50%. No. It was event after event after event after event. There was just nothing but negative things that happened consistently for like a 2-year span. And that's why we got a 50% stock market crash. And there wasn't honestly nothing positive about the whole situation, okay? Now, here's the thing, okay? We actually have some things to be positive about that could be going in the right direction here. That if you're thinking about a big rally in the market coming over the spring and the summer, we got some things here, okay? One is Russia-Ukraine. This could honestly wrap up in the short term. Like, don't be surprised if that gets wrapped up, that whole situation, sooner rather than later. 2, inflation is dead now, right? And everyone's going to finally realize that over the next few months. Like, oh, inflation's actually dead. The market still doesn't come to the conclusion that inflation's dead. It will come to the conclusion once and for all that it's dead, okay? 3, Fed cut cycle. We're in a Fed cut cycle, right? The Fed's been in kind of a pause, but at the end of the day, we're still in a cut cycle, right? Is the Fed likely to go up on rates or down on rates? Down. And we're likely going to see several rate cuts this year, okay? So Fed's in a cut cycle right now, which is helpful to the markets. 4, Trump can pump whenever he wants, okay? Whenever Trump wants to come out and pump, he can do that, okay? And number 5, real wages. Real wages could end up be in a pretty good place because we're actually still seeing some decent wage growth out there with inflation that's dying, right? Now, also keep in mind, Trump had very nice real wage growth. So what I'm showing you is a chart of real wage growth, kind of during the Trump presidency, right? But I want you to really focus on this green line I have here because this is the time Trump came into office, right? Through essentially before Rona, right? The whole Rona situation, don't pay attention to that because that was a mess. You know, we had stimulus and we had then, massive deflation of commodities. So that last kind of year of his presidency, don't pay attention to that. The first 3 years is what matters there, okay? And what we saw is very nice wage growth over that particular time, right? And, that led a lot of people to that kind of like that wealth effect that is very, very positive because at the end of the day, if your real wages are going up, you feel good. You feel like I can go on vacation. I can go to the restaurant. And that was definitely kind of that Trump economy, that first 3 years, there was a lot of that feeling. The initial, we had a little bit of downward move there, but the overall gist of it was real wages went up and up and up during kind of that first 3 years, right? Now, if you want to know why Biden lost the election, the main reason, honestly, at the end of the day was if you look at the Biden presidency here, real wages did not do well. They did not do well at all. And so people felt like, what the heck? Like, I'm doing worse over this, 4-year span than I was doing back here, right? So that's something important to keep in mind here, right? Now, the Fed worked also against Trump his first 3 years in office. And they're not going to work against him over the next year or two. The Fed's in a cutting cycle. You understand, in the first several years of Trump being in office, they're actually raising interest rates, which makes things harder, right? Now they're in a cutting cycle. So if anything, the Fed's going to more have Trump's back over the next 1 to 2 years, right? What happens in year 3 or year 4 for Trump, I have no clue. But year 1 and year 2, like the Fed's going to have his back and they're going to be in a cutting cycle overall, right? Now, additionally, the Fed has no reason to worry about inflation. Inflation's done, man. Like, that's an old story now at this point in time. 2 years from now, 5 years from now, who knows where inflation is. But for the short term, inflation's donezo. And so there's no reason to worry about inflation. You look at the government numbers, you look at what the real world's going on out there, you look at trueflation numbers at 1.5%, inflation's dead. You look at GSG, the commodities index, is dead, right? Obviously, you can say, well, tariffs, maybe that does it, but we'll see what even happens in tariffs. There's a lot of talk about this and this and this number and this number. We'll see. We'll see. But as of right now, the Fed has no reason to worry about inflation, right? Now, the moral of the story is here in regards to this, there's some positive things. There's some, here's a deal in the stock market. In good times, people can't see potential bad things that are coming, right? Go back to December, go back to January, it was just positive, 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 right? In the bad times, people can't see potentially good things, right? If you go back to late 2022, people couldn't see how anything could be positive and how the stock market ever be positive or things like that. Go back 5 years ago today, March, whatever today is, March, 14th of 2020. You think anybody was thinking positive anything was going to happen? No, people were thinking the stock market was going to be down for years. And it actually bottomed like a week or two later, right? Go back to the great financial crisis, right? I took you back to that March timeframe when we had such bearish after bearish after bearish AI and investor sentiment numbers. And man, was that wrong. And so every single time period when you go through a correction or a crash, people can't see the positive things. They can only see how it gets worse. They can only see the negative things. You got to open up your eyes because there are things to be positive about. Moral of that story, right? And so at the end of the day, here's the thing I'll say. The same thing I've been saying. I think we hit a bottom in March, right? And that's been my thought. And I think we move up from there. So bottom in March, and then we move up through the spring and summer, and then we'll see what happens in the fall. The fall could be fireworks again. Keep that in mind, right? That's what we saw in 2018. 2018, we saw a bottom right around March, and then we went on an absolute tear in the market through the spring and summer. And then we had a whole lot of drama in the fall. That could easily happen again. But the moral of the story is I feel like we bottom in March and then we move up from there. I hope we don't. I'd rather buy things for cheaper. I like to pay cheap prices. But if I had to put money one way or another, I think we bottom in March, right? So that's my thoughts there. Hey, it's Jeremy. I hope you really enjoyed that clip here today. What you looking at in front of you right there? That's the 6-figure Hall of Fame. Do you want to see the next one? That's the 7-figure Hall of Fame. Now, that is my private group. Those are members of my private group that have scaled to 6 figures, multi-6 figures, 7 figures, multi-7 figures in their stock market portfolio. They say you are the average of the 5 people you associate with. If you're somebody that is having trouble finding other long-term investors that are focused on building their wealth over the coming years, finding like-minded folks, look no further than my private group. We got a tremendous amount of people. We're consistently talking with each other, learning from each other, researching companies together, sharing news about our different companies, right? We do all that inside my private group. If you would like to apply to join us in there, go down in the description area. There'll be an application down there. You can click on that and you can apply to join us in there and take your game up to a much higher level and associate with the type of folks that you actually want to associate with. Let's go ahead and react to some Nvidia videos here.
Answer that question. They did not answer that question in 2 hours. This is not granted for investors. This is not a meeting for investors. But still, that is what has been dogging the stock.
Not a meeting for investors, but every investor is focused on the meeting. So it is a meeting for investors, and I think you're right. Look, Ruben looks like it's a second half 26 story. I think market probably knew that, number one. Margins didn't come up. Robotics, multi-trillion-dollar industry potentially. So he said all the things about the future and they're exciting, but I don't think anything that's been concerning investors or traders, I don't think any of those concerns were assuaged. And I continue to think that they might talk about a reacceleration of margins in the second half. I just don't see it happening. So this move actually makes sense to me.
And this was not a scripted speech, my understanding. So this is a kind of a free-flowing dynamic. And to the extent that you could have just gotten a little bit more into where the new use cases, in other words, moving away from data centers, moving into, there's talk about collaboration with GM on AI, et cetera, et cetera. So the $1 trillion addressable market isn't really new. I think if you look at the stock, from that Jan 7th, at least recent high, it's been making lower lows. So, we're going to talk about some of the other big mega cap tech stocks, but there's nothing on the charts that tell you that this company is in a safe spot. And semis, continue to look like they're vulnerable.
Is Tim playing hurt here, guy?
Well, that tie would suggest he's playing something.
What is that?
So
is the voice?
Does it get wider?
Melissa told me she loves this tie. She'd like me to wear it more often.
Is he a little
she's
hoarse?
Laughing, as if that's not what she's saying.
Nay.
The fever's broken in this trade. Let's just be clear here, right? So if this happened a year ago, whatever he said here, with those throngs of people there who were really excited, the stock probably would have been up 5%. We were looking through the options market. The implied move between today, this morning, and Friday's close was about 6% in either direction. Just think about that, okay? So when you think about what's going on here, the expectations, I didn't think they were going to be particularly high. The company just reported a few weeks ago. They obviously didn't say any real big news for this sort of event, and they probably knew that. The one thing I'll just say is, like, lots of headlines. When Guy talks about margins not going up in the second half of this year, the information has an article out this morning that Amazon Web Services, they're offering their own chip to cloud customers, same performance as the H100 from Nvidia, but at 25% of the price. This is how any other semi company who's coming into the space, they're going to compete on price, especially if they have the same performance as the last gen sort of chips. So to me, listen, the story's great, okay? They're expected to grow earnings and sales this year 50%, trades at 25 times. Next year, it's supposed to grow 25%, expected, trades at 20 times. So if you're a valuation person and you believe what they're saying, then the stock is cheap here. But if you think that the fever's broken all around, if you think that the economy is going to get weaker, if you think their major customers are going to pull back in their CapEx at some point or diversify away from a single source, then the story is not that attractive right here.
So it doesn't really matter what Jensen Huang says. I mean, to play the role of Ms. Silver Linings on this desk, and somebody else is not doing that tonight.
Sorry, I missed
the fact that there is no new guidance after 3 weeks after reporting earnings, maybe that is a good thing, considering how we have seen confidence drop off a cliff in so many other industries. For him to stick by that forecast, that wasn't enough still.
No, I think you make a good point, right? They have every opportunity to back away. The economy is slowing. Maybe CapEx is not going to be as robust. I think you're right.
Yeah, but they're missing the point. They're missing the whole point here. The whole point of what's going on with Nvidia and all the weakness in the stock, right, is really around 2026. That's what everybody's worried about. No one's worried about 2025 numbers. Like, that's silly. Like, we already know the big tech companies have already committed the money for 2025 for chips and all that. The worry is about 2026. The worry is about next year. Where are growth rates in 2026? We don't know. Maybe they're 10%, 15%, 25%, 30%. We don't know. And that's where things are murky. Like, if Nvidia had a guidance for 2026 of only 10 to 15% revenue growth, I wouldn't be surprised at all. They're coming off just ridiculous comps over the last couple of years. So if they had a lame year with only 10% or 15% revenue growth, I would not be surprised at all. All that would take was just Microsoft and Meta and those sorts of companies just say, we're not going to commit much new capital there, right? So now, how does AMD grow in that market? AMD is coming off such a low base that AMD will be able to grow regardless over the next few years, right? And so they're just coming off a very low base. Nvidia's got these monstrous numbers, this massive base that, is tough. And AMD's about to hit the market here with some very competitive products starting in mid-year. And it's not going to affect Nvidia's numbers much at all in the short term, meaning over the next, 3 quarters, 4 quarters. But could it hit Nvidia's numbers to at least a small extent in a year from now, 2 years from now? Yes. But that's not the major problem. The major problem is Microsoft, Meta, these sorts of companies, Google, they're likely not going to up their budgets much at all, at least in my personal opinion, in 2026. They're either going to cut budgets or they're going to keep them around the same, and they might give some of that money to somebody like an AMD that's obviously coming out with some extremely competitive chips that are likely going to end up undercutting Nvidia quite substantially.
But I also think the market's trying to get in front of potential slowdown and the potential for CapEx not to be as robust as things, as many of these stocks have priced in. I think that's sort of the rub right now.
So Nvidia, I do think it's been de-risked a lot in respect of, I wouldn't expect Nvidia stock to completely collapse from here. All things are possible. I just don't think that's going to happen because the PE ratios come down so much. So if all of a sudden the company, the year goes along and then they say it's only going to grow revenue 10% in 2026 or something like that, or 15%, it would not be fun for the stock, but at the same time, it wouldn't be that devastating because the stock is already trading at a very fair PE. Now, if they were trading at an 80 forward P, let's say, for instance, an 80 forward P, a 60 forward P, and all of a sudden they said revenue is only going to grow 10 or 15%, then we would have a stock that would be ready to collapse. But if you're trading at a 20-something forward P and you still grow revenue 10 or 15%, that's very fair. So Nvidia stock sets up well, actually, in my opinion, from kind of a risk-reward standpoint. The only thing that could really crash the stock is if Nvidia's revenues went negative. Now, that's a big assumption that Nvidia revenues would go negative. If that happens, then we could talk about Nvidia stock, going down 30 or 50% from here. But I wouldn't count on Nvidia's revenues going negative. I would just count on them kind of being much more modest than they've been in the past few years.